How to start trading. Get ready for the 5 things every beginner should know before trading. The first, finding the right broker. A broker or a brokerage firm allows you to buy and sell shares on the stock market. They charge commission fees for each transaction you make. That means that when you buy shares, you get charged. When you sell your shares, you also get charged. That's why it's always important to find out how much commission fee a brokerage firm charges you. Different brokers and brokerage firms have different commission fees and charges. Some brokers charge fees as a percentage of the transaction amount, while others charge a fixed fee regardless of the transaction amount. However, choosing a broker isn't just about the commission fees. It depends on 1. How often you buy and sell. 2. How much you are investing. If you intend to buy and sell frequently, choose a broker with lower commission fees. If you are a small-time trader, take note that a minimum commission fee will be charged for each trade, regardless of how little you are trading. The second, get a trading platform. Brokerage firms these days offer online trading platforms or even mobile applications that allow you to check stock prices and make trades on the go. If you have your own trading platform or software that you prefer to use or are more familiar with, you can use your own trading platform to do your own research and analysis on, and then place your trades or orders separately with your brokers. 3. Set aside money that you can afford to lose. Trading and investing is not saving. There's a significant difference between the two. Saving is putting money aside in a safe place where it stays until you want to access it in a few days, a few months, or even several years down the road. It might earn a little interest depending on where you put it, and it will be there for you in case of emergency or to achieve the goal you're saving for. Trading in a stock market is the process of putting your money to work for you. When done properly, it can typically make more money for you than the interest you might earn from your savings account. But with reward comes risk. If you make poor choices or if you don't have the proper skills and knowledge, you could lose that money. The money will then not be there for you in case of an emergency. Always remember the never trade or invest money that you can't afford to lose rule and never violate it. You should not have to worry about eating canned food if your trading account is wiped out. Have a diversified financial portfolio in which the stocks you own should not be the only financial asset you own. You should set aside money for savings, emergency, and so on, and allocate a portion to trading and investing. If you lose this portion, you will have other assets to fall back upon. Therefore, only set aside money for trading that you can afford to lose. Fourth, consider starting with exchange-traded funds. Most beginning traders believe that to make real money in the market, you have to pick and trade individual stocks. But that's not actually true. Many traders have made their fortunes using exchange-traded funds, and these vehicles are a great way to make trading for beginners easier to grasp at first. In particular, ETFs give you automatic diversification even when you have very little money to trade. Every dollar you invest gets split across thousands or even hundreds of stocks, immunizing your portfolio against catastrophic events that a given individual stock is not immune to. By acquainting you with how the markets work, ETFs make a great entry point for beginner traders. Fifth, start with safer stocks. Even though starting with ETFs can be a smart move for traders who are starting out, there's an alternative way of trading for beginners. If you focus on individual stocks, you can potentially earn returns greater than the returns of a broad index. Generally, focusing and trading leading companies in their individual industries can allow you to generate returns greater than the broad index. Furthermore, leading companies in their individual industries also tend to be safer and less volatile compared to smaller and medium-sized companies. So these are the 5 things every beginner should know before trading. To recap, The first thing every beginner should know before trading is finding the right broker. Finding the right broker is not just about finding one with the lowest commission fees, but also about finding one that suits your trading and how often and how much you trade. The second is getting a trading platform to do your price analysis and charting. Many brokers have their own trading platform, but you can use your own platform to do your analysis and then place your trades with your broker. The third is setting aside money for trading that you can afford to lose. Never trade money that you can't afford to lose. Fourthly, is to consider to start with exchange traded funds as it gives you greater diversification compared to individual stocks. Lastly, if you decide to start with individual stocks, start with safer stocks. Generally, leading companies in their industries tend to be safer and less volatile. There you have it. That's the 5 things every beginner should know before trading. If you want to discover more about ETS, check out the video I made on the 3 reasons why to buy ETS. The link is right there on the screen. I hope you enjoy it and continue to be 1% better each day.